welcome all to the 35th annual general meeting of Usha Martin Limited. Hope all of you are keeping safe and healthy. I am attending this AGM remotely from Singapore. Thank you very much for your questions. I will now attempt to answer a few questions in a consolidated manner. For the remaining questions, which are specific in nature in terms of financial numbers or secretarial data, I will request our finance and secretarial teams to provide appropriate responses subsequently. Thank you very much, shareholders, for your valuable suggestions and questions. I would try and answer a few. Last year, our EBITDA was 313 crores on a consolidated basis, vis-a-vis 285 crore, in spite the impact of COVID-19, which the operations in India as well as our international subsidiaries had to face globally. However, I'm happy to say, despite our first quarter, which was affected particularly because of the lockdown all over the country, the rest of the year, the company has been able to improve its performance quarter by quarter and achieve these results. On the vaccination, while various steps had been taken to tackle the COVID-19 in terms of social distancing, sanitization, and other activities in all our plants, I'm happy to say once the vaccination started, almost 90 to 95% of our employees have been vaccinated. And by end of August, we should have the second vaccination also complete. And all the costs have been borne by the company or under the government scheme. None of the employees had to pay for any of the vaccination. Also, unfortunately, we had few incidents of deaths because of COVID-19 in our plants in Ranchi and also in our Silvassa plant, which is our Cable, which is our subsidiary. I'm happy to say that while the numbers were not large, but the company has taken care of all their employees and their families, including their and the company has come out with a policy which has really ensured sustainability of the employees. Wherever possible, we have even taken care of their education for the children till they become up to their graduation level, and also made sure that they get 50% of the salary for up to 20 years or up to their retirement. And this has been well accepted, and a couple of cases where the spouse is capable of and is qualified to take care of the to get an employment, the company has taken care of that as well, which has been very well accepted and appreciated by the employees. Once we have sold the steel business about 2 years ago to Tata Sponge, we are now basically a wire rope and specialty wire company. One of the questions of the shareholders was that how is the supply of steel since we are not a steel producer anymore. I'm happy to say that we have had a very good relationship with Tata, and we had an agreement of a supply arrangement with them. Also, the company has developed JSPL and Electro Steel, both in the state, situated in the state of Jharkhand, for supply of our raw material, and the company has had no problem in terms of supply of raw material for its production. The steel imports had gone up considerably particularly in the last 12 months, and the company has been able to take care of the, has been able to manage to pass on the price increase and able to manage our margins despite a very steep price increase. The EBITDA margin was 13,000, as one of the shareholders mentioned, 13,000 plus last year. This year also we expect it to be around this, or maybe slightly higher, depending on how the demand comes up in the near, in the balance part of the year, and of course, hoping that there is no major COVID third phase disruption. The net debt on the balance sheet is 258 crores on a standalone basis and 342 crores on a consolidated basis, and we expect a decent reduction during this year based on the various cash flows expected from the operations of the business. Tata long product, the payment of the total outstanding as on 31st March 2021 was 160 crores, mainly on account of supply of certain land parcels to them. I'm happy to say that the first tranche of 33 crores has been received in this quarter, and we expect that during this financial year, we would be able to recover the entire 160 crores from Tata's. The pledge, the promoters had, when the company had gone through a difficult period, the promoters had pledged 26% of their stake to the lenders. At that time, the debt was close to 5,000 crores. Now this pledge is for basically the 100 crores loan pending, mainly from ICICI, and hopefully in the next couple of years, this should get paid off from our cash accruals. On the capital restructure, the company had been suffering substantial losses during some of the past few years. The company sold its steel business during FY 19-20 and deleveraged its balance sheet substantially. Further, for the past 2 financial years, having staged a complete turnaround, it is now consistently profit making. However, despite the turnaround, the company continues to carry 808 crores losses in its retained earnings as on 31st March 21. At the same time, the company has credit balances in securities premium account of rupees 856 crores and other reserves of rupees 63 crores, capital redemption reserves of 23 crores, and capital reserves of 4 crores. The company is therefore carrying out a proposed reorganization to utilize the above mentioned credit balances in the specific reserves against the accumulated losses, retained earnings, to portray a true and fair value of the intrinsic value of its continuing business, specifically considering the future earning potential demonstrated by the continuing business. The reorganization is entirely a book entry and does not involve any cash transaction. This will only help us to strengthen and give the true picture of our balance sheet. And we expect this to be completed subject to the approvals from SEBI and CLT and others and the shareholders by end of this financial year. Suggestion on the concall, investor concall and investor presentation is well taken, and the CFO has already planned and will start from this quarter itself. The next 3 to 5 years, we expect almost 20 to 25% growth in our top line every year. We plan to invest, as was suggested by some of the shareholders. The Ranchi plant has been in existence for quite some time, for many years, and it requires both in terms of capacity expansion as well as modernization of the plant. And we expect about 100 to 125 crores of capex investment in our plants in Ranchi and Hoshiarpur to upgrade the facilities as well as to expand, more focused on high value and quantity increase in our wire ropes, as well as we are evaluating the LRPC expansion also because of the various demand which is coming up on the infrastructure sector. The Bombay, we still have the Kalina office, which is there in Mumbai. The Churchgate office was left many years ago. The market share of wire ropes in India is Usha Martin has 50% plus share of the total wire rope in India, and in the international market, I presume it would be close to 6 to 7% of the global market. The dividend policy, the board of directors would, based on the performance of the business, the board will definitely consider, and we hope that coming next year, the company should be back on the dividend list. As I mentioned, the expansion of the brownfield expansion would start both in our Ranchi, Hoshiarpur plants, as well as our plants in Dubai, as well as in the UK, and even in our Thailand plant. Bangladesh, yes, Bangladesh is developing fast, and we have started Bangladesh, and we intend to appoint agents or supply from our manage it from our Calcutta office. Supply of steel, there is no constraints. We have got very good relationship. All our international businesses have done well, including our Indian subsidiary Cables, and we expect it to do well even during this year. Of course, of late we are finding Southeast Asia, the Malaysia, Indonesia, Philippines, Thailand have gone through second very with the variant a difficult phase going through, but our team has been able to manage and the situation well, and we expect, barring unforeseen circumstances, that things should get better going forward. On the renewable energy, our team has started working on looking at. We have 100% capital, 100% coal generated plant. We generate about 20 megawatts of our own power plant in Ranchi, but which is coal based, and the company has started working on looking at green energy, including solar, and see the feasibility. And we will definitely be taking a call depending on the whole economics and viability during this financial year. I think I've answered most of the important questions, and we hope that the next financial year, the company, this financial year, barring the the COVID situation, we expect things should be better going forward. And most of the end users and customers, particularly for our wire rope business, have been doing fairly well, and we expect a continuous good demand from our customers both in India and overseas. With this, I think I have answered most of the questions, and would request now that that's all from my side. Thank you to all the shareholders for participating in the AGM and continuously providing us your support and good wishes. I wish you all good health and good luck. I now request the moderator to continue with the remaining proceedings of the meeting. Thank you.